Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, daily chart, you can see the expansion continues, dealing with the upper band for the third day. So 4 days, a day off, secondary band ride, and you can see, some of the power in the dip buying and the FOMO, and we've now traded as high as 53.75. They took it down yesterday. They took it down nicely. They went down and they dealt with, they were dealing with 65.5. They had every opportunity. The Bears did if they could hold 84.88. They really could have expanded it down and done potentially a test of the weekly pivot down at 29.27. It was begging to be made into a trend down day. But what happened is what happens so often. You give the dip buyers, you give the bulls, you give them a little bit and a little bit more and a little bit more, and all of a sudden you're getting V'd for the rest of the day, and you end up making highs into the close, and that extended up into the Globex and put it as high as 53.75. So the total move was, not quite 90 handles. So it was a solid day to trade. It was a really nice day to trade. We had so many tight regular sessions that hadn't, given a lot of elbow room to get work done. But the shorts were good in the morning. The longs were good, after that. As we head into today, you can see we're dealing with the upper band. We're on either side of that. That's up and around the 43 area. You can see that they've attempted to convert. They tested and had the hourly mid-band successfully hold down around 30. It's up at 34.69 now. So for the Bears, their task is they've got to convert the hourly mid-band first and foremost. See if they can turn that into resistance. If they can make their way back towards the daily pivot at 14. The bulls, they're in a situation now where they really just need to hold serve. There isn't a whole truckload they need to do. They just need to not give it up. They can't be doing this stuff every day, though. You do that enough, and you get the wrong piece of news that fuels it, and you'll get a deeper move. Even if that happens, though, the ability to sustain that move is pretty questionable. We talked in yesterday's webcast about, in the absence of news, and in the absence of news specifically about trade in China and Hong Kong, they have found really nothing to throw at this tape that can knock it down. And even though that kind of news can knock it down, we've yet to see its ability to keep it down. So there can be X number of people out of work. There can be X number of cases of COVID. There can be all this stuff. We are back now to where we were pretty much late last year, early this year. Tape doesn't care. Tape cares about China, U.S. trade stuff. Doesn't really care about anything else, seems to absorb it all, and in a vacuum it wants to go higher. Now whether that is logical for you or not, let me be, hopefully not the first one to tell you that the market and the tape really doesn't give a shit. The market and the tape are going to do what they're going to do because they're a tape. And they didn't read Barron's on Sunday, and they didn't stay at a Holiday Inn Express, and they don't watch fucking Squawk Box. They don't care. It's price. It just is. So, the last, month or so through this consolidation, going back into late March, you can be long or you can get your butt kicked most days. And, are we done going up? Is it going to exhaust up here? I don't know. If it does, we'll get short. If they can't hold it, we'll get long again. But understand that until the Bears can convert areas that are meaningful on a closing basis and on a multi-day basis, shorts look great. They feel great. They're profitable. You can do, You can do 20 handle runner or 19 and a 19 handle runner on a short, but you've got to understand that as soon as there's chinks in that armor, you got to roll down stops, you got to take your profits, and you got to look at the other side because that's what's running farther. That's what's running farther That's what's working right now. People hate band rides. They love to fight them. And 7 of the last 8 sessions, with the exception of last Friday, we have been engaged with the upper band. They're notorious for making big dips and then ripping back up to touch the upper level. That's what happened yesterday. So, if you hate this rally, you're not alone. But it doesn't mean you can't be long the rally and make money. You have to compartmentalize those two things. So I get the feeling just from looking at social and other stuff that there's a lot of hate out there for the rally, and I get it. But hating a rally should not be an impediment to you profiting from that rally. They're two completely separate things. All right. Everybody have a fantastic day. Be safe. Be healthy. Take care. Trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.